portfolio is based in the UK. We have 5 pre-identified student housing development sites in Edinburgh, Bath and London. And there's an opportunistic overlay which will take advantage of COVID-related market dislocation in the UK. It is institutional now, so mainstream. It's now a £50 billion sector in the UK. But of course, if you're looking at it from an institutional point of view, the income is an inflation beta and is always seen as very attractive for the end buyer, typically institutions that want to mitigate their own liabilities. The UK is the second most popular target globally for higher education. That's after the US. There are 77 individual markets in the UK. All have their own different dynamics, so that's whether it's supply versus demand, planning permission, mix of students, domestic versus international students. So there's a lot we can get our teeth into. So in terms of the locations, we look at Russell Group University cities. We look at where they sit in the Guardian or Times Good University leagues. We look at where they sit in the Savills Best Cities for Student Housing Development. We have to look at where students want to be, first and foremost. Whether it's close to the university or it's close to the city, whether it's close to amenities or transport. We've been doing it for about 11 years. So people know us very well in the sector for doing student housing developments. QIP is investing a portion of the equity, so we're putting in 10% of the equity value. We do cater for the whole spectrum, so whether they're high net worths, family offices, institutions, all have slightly different needs, and we're happy to cater as much as possible for those differing needs of the individual client base. Is 3 to 4 years, that's from money in to money out. That gives us time to be able to buy the site, build it, operate it to stabilise the income, and then to be able to sell it. This is a very typical time frame that we use. And that gives us a return of between 13 to 15% per annum based on relatively conservative figures. We have to look at it from a risk management point of view, and of course when we talk to clients we have to be very clear. But it's worth noting that despite COVID, higher education in the UK has continued. The portfolio does not open until September of 2022, so we're 2 years away from opening. So whether we look at construction, whether we look at debt availability, at occupancy in the buildings, we feel, given those parameters, we are COVID-proof.